Monday, November 3rd, 2025. It's Luther here on another YouTube Real Estate Investor Series. And today I'm going to talk about the capital stack again. What is the capital stack? All right, so for those that don't know, because I didn't know until just a couple years ago, as I was doing some networking and I was hanging around some multifamily and commercial investors and some brokers as well, who were more used to private equity. They were used to raising capital. They were used to doing larger funds and syndications and so forth. So I started to dig into that world a little bit. And the capital stack is basically the funding and the financing that you're using, along with whatever additional funds that are being sourced or used for your real estate investments. So, you know, I talk about this stuff quite often in previous videos. I know I did at least one other video in regards to the capital stack, but I want to dig in a little bit deeper today to get more practitioners and investors to think about it, because when you are using other people's money, okay, it could be fantastic. It can truly help to accelerate your portfolio growth, okay? It'll help you do more deals, but it's also a double-edged sword, okay? So depending on the cost of the money and the terms of its usage, right, you gotta pay it back, right? So I know for sure on a video I did a couple weeks ago, I talked about the use of short-term funding or financing, okay? However it's set up for long-term investments. So if you're going to do deals and you want to do long-term buy and hold investing of some type, right? It's critical to be able to have access and to use some type of long-term financing, because if you don't, it could end up costing you a property, or, you know, if not a portion of your portfolio, okay? It could end up costing you your entire portfolio, okay? And those costs there are critical. I mean, I'm going through some challenges right now, and I was talking with a mentor of mine last week. He is an investor here in the Kansas City market as well, and he also does private money lending. He's dealing with a foreclosure situation where he loaned money to a local investor. It just happened to be money that was in second lien position, and the investor is nowhere to be found. The investor, he doesn't hear from. He hasn't heard from the investor in a little while. So again, like for those investors, okay, who primarily want to do buy and hold, because that is what I push the most. I think that is the safest, most secure way to invest. And in actuality, I think that is what most real estate and most investing is all about, is buying and holding for years, if not decades on end. And then later on down the road, you get to really enjoy the fruits of your labor, okay? Along the way, sure, you may have to do some short-term transactions. You may be able to enjoy some cash flow, but I think today, fourth quarter 2025, with everything that's going on globally, here in the US economically, just there's different risk factors that are out of our control. So this is super important. All right, so what is the money you are borrowing actually costing? Okay, so I mentioned before, for a lot of investments, there's some type of first lien position debt, okay? It's a mortgage, okay? It could be either short-term, okay, or it could be long-term, right? It's either gonna be fully amortized, or it's gonna have a term or some type of balloon, okay? It could be interest only, or it could be principal and interest pay down, okay? So I know some of this is somewhat advanced, but again, refer back to some of the previous videos where I talk about private equity, private lending, funding and financing for real estate investors, because it's absolutely critical, okay? So the stuff needs to be documented, all right? first lien position, there's going to be a set of documents. I did a video on that. And if you are using other people's money to fill those gaps, okay, whether it's secured or not, it's in second lien position. Okay, I hope that makes sense. So when I say secured, it means that there's a set of documents that have been signed and recorded on the public records, right, for the borrower, okay, right, and for the lender, okay, or the investor. It could be a combination of the two. Okay, I know I've done it in the past where I have a partner and he has ownership of the property, okay, and he also is, in a sense, loaning money to the company, to the LLC or whatever entity structure that you are using. Okay, so that particular partner gets a share of the cash flow, and then at some point in the future, he's gonna need to be recouped for the money that he put up for the investments. Okay, so encourage y'all to take a deeper dive into this stuff, okay, because you gotta think about like who really owns the real estate, okay? I understand that we as investors or property owners have the deed, okay? But if you have a mortgage in place, you're gonna be paying that mortgage for years on end. That part, no big deal for the most part, okay? Where it gets interesting is the gap funds and the second lien position debt that I mentioned before. How is that structured? What is the cost? What are the terms of its usage? Because that's where things can get very interesting, all right? And I talk about capital, strategy, and operations, okay? In that order, it's very important, okay? Because you can have the best operator in town, and you can have a really amazing investment strategy or business model or investment model, okay? But if the capital is kind of funky, okay, or if there isn't maybe clarity on that capital, then it again could ruin the portfolio. You end up paying the lender in first position, you end up paying the second lien position holder, whether it's private equity or a private loan or both, and then you as the investor may not make anything. And again, like it's a different ball game now. So even more so if you were doing short-term transactions, okay? We're seeing an uptick in foreclosures. Days on market for resale properties have increased. So you got products sitting on the market a little bit longer. So that means that it's gonna cost more. Those holding costs for the money that you borrowed, okay, for holding costs, utilities, lawn care, snow removal, etc. And then you also have business expenses to take care of the entity, to take care of your people, and so forth. So if you're going to do a short-term transaction and you're gonna use short-term debt and you're gonna take on a renovation project, you really have to be more dialed in because, at the end of the 6 months or 3 months if you're lucky, or perhaps a year from the time it takes you to acquire the property, to get through the renovation, to get through the resale, to closing, funding, and so forth, it very well could be 12 months and you might break even, which means that you just did that for free. Or if you wanna look on the bright side, you learned some valuable lessons about the reality of real estate investing, okay? And so you can have some investment success, you can do deals, and you can grow a portfolio, but where is the money going, okay? It's important to, I think, okay, I mentioned it before, I'll probably repeat it time and time again, ownership management of some sort is critical. If you're owning the real estate and you're investing in real estate, you or your business partner or you or someone on your team ideally has ownership they're going to probably take care of things a little bit better, whether it's a part owner who is the GC or the asset manager who is part owner, or if you happen to connect with a property manager or someone who can do that, who's part owner, and you plan for the long term and your debt is clean and you're managing effectively, efficiently, proactively, and you're shooting for the long term, there's a very good chance that you will have success. All right, so I'm gonna leave it at that because I know I could talk about this particular topic for another 45 minutes because it's exciting to me. I'm passionate about it. It's what has truly helped me take my investing career to the next level. But again, you know, I've had to take some pauses along the way to think about the debt and getting my, you know, service provider settled, getting my partners and my private money lenders settled. Okay, so if you want to know more about how you can leverage capital, whether it's yours or someone else's, more effectively, if you want to have a strategy session, talk about seller financing or investor financing, you know how to reach me. All right, thanks for tuning in. Peace, y'all.